is up, crypto peeps? Hope you guys are staying safe through this market dip. I think it's safe to say that if this continues for a couple more weeks, that we can call this an official bear market. You know, I mean, I know that the stock world and the crypto world is different, but in the stock world, a bear market would loosely be defined as something that's down at least 20% over somewhat like a two-month period of time. So we're nearing that in the crypto world. So if you look at coin market cap right now, this just looks like a sea of red. I've called it the crypto red wedding before when this has happened a couple times. You see Bitcoin down to 9,200. It went well below 9,000 today. It looked like it was about to test, maybe break the 8,000 level. Now, why is this happening? There's a number of different reasons. So I hate this general sentiment that you get in crypto that everything is tossed up to FUD, right? FUD is a real thing. If you've been trading stocks or options for a long time, you know that FUD is just market sentiment, and market sentiment is one of the biggest drivers of the market. It's a huge market force, how the investor feels, right? So FUD, yeah, while to you and me may seem ridiculous, like why are these people overreacting over something? It's investor sentiment. And there are, and let's face it, I mean, there's a lot of new investors in crypto. There's a lot of people who want to take advantage and jump on the bandwagon and come from the stock world or the Wall Street world into crypto. I mean, who do you think is buying Bitcoin at $19,000? No offense to those who are watching that did. But who do you think is buying Bitcoin at $19,000, right? Bitcoin at $19,000, who would buy that? It's usually somebody who's not experienced or someone who's trying to jump on a wave or a bandwagon because of fear of missing out. So let's not toss everything up to FUD and dismiss it as something, you know, ridiculous. The reasons for the FUD could be ridiculous, but FUD is a very real market force. So we had the bad news coming out of Asia in the beginning of 2018. We had the closing of the first options on the CBOE. There was the Tether controversy. There's the controversy in India. And let's face it, those of us that have been trading crypto have been talking about somewhat of a correction or a reversal after the holidays, right? Like the December that's when Bitcoin started hitting its all-time high and when the market cap was well above $800 billion. But we all knew that after the holidays, nearing January, some of that excitement would dwindle and we'd see, you know, a drop in prices. I didn't expect the market cap to lose half its value, but we did expect somewhat of a reversal or a correction or consolidation after the holidays. So what measures am I currently taking to protect myself during this storm? So the coins that I bought at a high price or next to an all-time high because of my projection based on their fundamentals, not necessarily based on the technical analysis of the charts, but based on where I think the technology within those coins or projects are going. Those coins I put a 10% limit on. So I don't want to bleed more than 10% on those coins. I put stop losses at 10% on all those coins. So if they are triggered, and some of them did trigger, I end up selling and not losing more than 10%. There are a lot of coins that I just plan on holding because I got them at a great rate, and I even plan to buy more if we hit a certain price level. So Neo is one of those, Icon is one of those, Ripple to a lesser extent, Lumens. I got all those coins at a great rate, so I am actually holding on to those, and some of them like Neo and Icon, if they hit a certain level, I'm actually going to buy more. And in the investment world, you hear that referred to as buying the dips, right? You're buying basically the market dips to increase your positions at a discount. That's essentially what you're doing. And there are certain projects that I feel really strongly about that I want to increase my positions at, and I'm actually getting them at a discount. It's like a Black Friday. And the last thing that I did was take a good percentage of my Bitcoin and put it into Ethereum. And I'll explain why I did that in a bit. And I'm sure a lot of investors did that. I was actually looking at some of the charts and the volume on Ethereum is just increasing steadily. And I think a lot of investors are actually doing that. They're putting their money into Ethereum instead of Bitcoin. I definitely am not going to use Tether anymore, even though I might have recommended that in the past. If you saw one of my previous videos, I told you to stray away from that. That's what I'm doing. I mean, you can do what you want, but that's my position on Tether. And it's funny, during these market corrections or market dips, people tend to freak out And they're like, what are you gonna do? And I'm getting a lot of messages in our Discord saying, what should I do? Should I do this? Should I do this? And it's actually pretty simple. I mean, as long as you have an exit strategy, then things are simple. That's what I tell people. Don't overcomplicate things. Don't, look to put your money into, IOTA or Cardano or sell everything for USD. I mean, just have an exit strategy. Have a certain standard and keep to that, right? Have a certain plan and a certain standard and a maximum loss that you want to keep to, and stick to that. Don't just stare at a chart and wait for things to decline and say, oh no, I'm not gonna sell yet. I'm gonna keep holding out. I'm gonna keep holding out. Maybe we'll jump back up. No, have a plan and stick to it. That's how you become a successful investor, is sticking to your plans, limiting your losses, and taking advantage when you can. So that's why I'm not worried at all, right? Because I have exit strategies. So for the coins that I, bought on the hopes of them becoming something, but I purchased at a high rate, I gave myself a 10% maximum loss. If they hit that, great, it triggers the sell and I'm free of it, right? I don't lose more than 10%. I can actually put that money into buying more Ethereum because Ethereum is cheap right now. For the coins that I got at a great rate, I'm just gonna hold, because holding is also a great strategy depending on what you're holding and at what price you got it for. And even with Bitcoin, my exit strategy was to liquidate 25% more of my Bitcoin into Ethereum. And depending on where Bitcoin, how low the price of Bitcoin got, I would have liquidated even more. So I set these targets for myself, and you should set these targets for yourself as well. Just make it easy on yourself, right? Like, no need to stress out and, what should I do? This is all FUD, this is crazy. My portfolio is bleeding, everything's in the red. Yeah, guess what? Look at this. Every single thing is in the red, yes. Except for a couple of things. BitConnect, oddly enough, being one of them. I saw that earlier. All right, so why am I ditching Bitcoin for Ethereum, and what is the flippening? If you guys haven't heard of the flippening, it's basically the anticipation of the moment in which Ethereum will overtake Bitcoin as the #1 spot on the market cap. Now, market cap is not everything, obviously, but it would be a really important step in crypto because we don't want to rely on BTC's dominance the entire time, and we don't want the market to fluctuate just because BTC is fluctuating at the moment, right? We want this to eventually become a real marketplace where coins can move in isolation and not have an effect on the entire market itself. So in the fundamental sense, Ethereum is more robust. It's considered the pioneer in the smart contracts world, right? A bunch of tokens are based on the Ethereum network. Smart contracts are definitely the way of the future. Like I said in previous videos, there won't be an industry that won't be touched by smart contract in some way or another, whether it's medical, whether it's payments, whether it's gambling, whether it's dating sites, whether it's ride sharing. Everything is going to be based on smart contracts, and Ethereum so far has shown itself to be robust and capable of scaling or scalability. Now, in comparison to Bitcoin more and more by time, and I think that's one of the reasons for its decline recently. Yes, you have the FUD and the Asia news and all this stuff in the futures, but I think that one of the biggest reasons why Bitcoin is steadily declining at the moment is because it's seen as slow, it's seen as expensive. Its limitations are basically at the forefront of people who are in this industry. People see its limitations, right? And there are a lot of coins that are coming out and introducing themselves as a cryptocurrency or a payment system that seem to be a lot more robust than Bitcoin. And Bitcoin keeps needing to be forked, right? You have all these hard forks in an attempt to try to improve upon Bitcoin, and the market isn't really taking to those forks or the tokens that were being produced from those forks. You have the Lightning Network that is looking to build upon the blockchain itself in order to make Bitcoin transactions speedier. So people are seeing the downfalls of Bitcoin, and I think that's one of the biggest reasons, as well as all the other ones we talked about, whether valid or not. There's still reasons why Bitcoin is declining. So let's take a look at some of the technicals real quick. So if you look at the market cap for Ethereum, it's at 100 billion. Bitcoin is at 155 billion. We're not that far off. All it would take really for Ethereum to match Bitcoin, even if Bitcoin's market cap and price stays as is for Ethereum to increase in 50%. So the price would be somewhere around, $1,550. We'd get a market cap similar to Bitcoin's. And I charted Ethereum out earlier, and obviously one thing we know about charts is not all of the formations and patterns play out exactly as you see it. As you can see here, actually, I charted this uptrend line, and here you see this day candle breaking below the uptrend. So the patterns don't conveniently form for you exactly as you see it. But the long-term outlook for Ethereum, based on my analysis and the analysis of a lot of other people, is bullish. So you see here, this is the 50-day moving average, this is the 100-day moving average. It's still trading well above that. You have this uptrend line that actually is starting to break. We don't know how the day will close. We'll see if it actually breaks above that or continues to break below that. What I actually think will happen is you'll probably see Ethereum in some sort of continuation pattern. So you probably see Ethereum I would say continue more. Well, let me just actually get another trend line. So you actually see Ethereum continue more in this channel until it starts to get squeezed and bounce around in here a bit. I don't think that you're gonna get this perfect wave of zigzags where it's gonna bounce off of the uptrend line and just shoot past the moon. I think it will bounce around here a little bit before going up. And speaking of a $1,500 Ethereum, if we take a look at a fib extension, you see that at the 786 ratio, a $1,500 Ethereum is actually not out of the question. We were at an all-time high of $1,400 not very long ago, so I do think that will happen before the end of 2018. And another one of the reasons why I picked Ethereum over Bitcoin as a way to park my coins in the moment, in the midst of this market dip, I was doing some calculations on standard deviation, and I actually took some historical data. Shout out to Cointelegraph.com. This is where I got all this data from. You can actually export this in as a CSV or an Excel file. So I went back from December 1st to January 31st, took all the historical data of Ethereum, took all the historical data of Bitcoin, and put it into this standard deviation calculator. Now, without getting too much into it, I don't want to give a statistics class right here on this video, but basically I plugged in all of the closing prices from December 1st to today for both Ethereum and Bitcoin, figured out the standard deviation, and the standard deviation is just a move away from the mean. So in simple terms, it means how spread out the prices are, or how far away from normal it is, and normal meaning the mean of the prices. So here we have Bitcoin's numbers, here we have Ethereum's numbers. So I got the standard deviation for each, and I plugged them into this Z-score calculator. And again, without getting into too much detail, you see that currently this is Bitcoin Z-score, so it's at minus 1.95, meaning it's almost 2 standard deviations away from the mean. So the mean price since December 1st to today is almost 14,000. Currently, Bitcoin is at 9,215. I got that from CoinMarketCap. So currently, Bitcoin is almost 2 standard deviations away from normal and behind, right? It's lower than the mean. Whereas Ethereum, when I did that same calculation, Ethereum is 0.62 away from the mean in a positive sense, right? Because the current price, 1,029, is more than the mean. So since December 1st, we see that Ethereum is actually more quote unquote stable in terms of prices and standard deviation. Now, I hope that didn't get too boring. If you want me to explain it later, hit me up on the Discord. We can talk all day about statistics and prices. All right, hopefully I provided you with a little more clarity on how to maneuver within this market dip, and maybe give you a few pointers that you can use. Again, join the Discord. It's 100% free. If you guys have any questions, we've built a great community. Not only me, but there's a lot of knowledgeable people on there that can help guide you, and if you feel lost, can provide you with the support that you need. Also, sign up to the Patreon if you want to support us and or get the custom trade alerts that we send out every day, as well as the top picks that we send out weekly. Most importantly, subscribe here for more crypto talk, trading strategy, and crypto news. I am not your financial advisor. Leave a comment, leave your crypto addresses in the comments. Bitcoin giveaway 10K. Thumbs up. Again, subscribe. Peace. Peace.